What's up everyone? Welcome to Wise Wealth, where we dive into all things personal finance. Today we're bringing you episode 8 of our Stock of the Week series. In Stock of the Week, we pick a stock for any host of reasons. It may have been in the news recently, a recent earnings report may have been published, or anything else, and we break it down in a video for you. We'll take a look at any recent events that may affect the stock, what its performance has been like, and what we think it will be in the near future. The analysis will go into the financials, what it's trading at, and ultimately, do we think it's a good investment at this point in time? At the end of the analysis, we'll rate the stock out of 10 to give you an idea of it in a quick and easy to understand video. And I hope that it helps you with your own investment decisions. Now I must caveat this by saying that this is not financial advice and is purely my own thoughts on the stock and intended for educational purposes. I'd always advise doing your own due diligence before investing your own money. So welcome to episode 8. I've been receiving a lot of positive news in relation to the series, so thanks for that, and I hope that this episode will provide you guys with some value. If you're new here, then welcome to the channel. If you're looking for content about stock market investing and personal finance, be sure to subscribe to my channel and hit that bell icon to get notified when I upload new content. Without further ado, let's get into today's video. So in today's episode of Stock of the Week, we'll be looking at Segro, ticker symbol SGRO. Segro is a UK-based real estate investment trust. The company owns, develops and manages warehouse properties in the United Kingdom and continental Europe. Its segments include Greater London, Thames Valley and National Logistics, Northern, Southern and Central Europe. As of making this video, they're currently trading at 936 pence per share. The rise of convenience-based e-commerce services such as next-day delivery and same-day delivery, combined with more retail brands moving to online platforms to maintain sales, has meant that over the years, logistics hubs and warehouse real estate has seen a huge spike in value. Due to this, Segro's portfolio has seen significant gains and therefore its share price has gained over the last few years as well. As shown by the growth chart, Segro's share price has grown over 118% in the last 5 years, meaning an investment of £1,000 5 years ago would now be worth £2,180. On top of this, Segro pays a dividend to its shareholders. The yield of 2.21% is not the biggest that can be found on the FTSE 100, but the passive income in addition to the steady share growth means it's a highly attractive investment. The first point to address is, why is Segro a better investment than other FTSE 100 REITs? Simply put, the asset class that makes up its portfolio is where the current and future demand is. Warehousing and industrial has been dubbed as the hottest asset class in real estate for many years already, and has only been amplified by the shifting trends in how consumers interact with businesses. The demise of retail over the years has only been hardened by the latest restrictions, with footfall on the high street falling 30% from last year and over 60% at the height of the lockdown. Stores have been forced to close and move to larger scale online operations, and this is where Segro's properties come in. Not only has the high street suffered, but out of town retail parks and shopping malls have fallen in valuation as well, which have really hammered the valuations of portfolios of retail investors. The likes of British Land and Landsec, other top FTSE 100 listed firms with large exposures to retail, have seen a significant drop-off in their share value as a result of both the pandemic and structural trends over the last 5 years, as illustrated by their share charts. More importantly, as a passive income investor, these firms were forced to suspend their final dividend at the height of the pandemic. As rent collection struggled in the retail sector, uncertainty mounted for these firms and investors missed out. But not with Segro. They paid out comfortably, and they even lifted their interim dividend by 9.5%. Looking at Segro's dividend in more detail, we can see that this interim lift hasn't been a one-off, but is a regular feature of Segro's approach to investor distributions. Their dividend has grown over the last 5 years and more, and their growth is increasing. While the dividend yield may be lower than other potential sources on the FTSE, getting in at an attractive price can quickly turn into a larger return within a few years. Also, if you look at the dividend cover, there is a healthy amount of room for future dividend growth on top of the growth that we're already experiencing. Additionally, the nature of the investment compared to other FTSE-listed REITs means that your capital is relatively stable and isn't susceptible to large share value losses in the near term, as we've seen with office and retail investors. While Segro did drop quite drastically during the March lows, it has since recovered to its previous trading highs and even hit new records since then. The same cannot be said for Landsec and British Land, with their share values down nearly 50% since February. Their financials reinforce the stability of the company with the recent trading update on the 21st of October. Segro reported a solid 85% rent collection build, higher than the equivalent dates in the second and third quarter. Only 13% of rent payable was deferred by the agreement with tenants and to be paid monthly. With the industrial asset class booming, tenants are much more comfortable paying on time, whereas retail is forced to lag behind with continued restrictions being placed on the likes of the hospitality sector. Within their leasing pipeline, Segro signed contracts worth 15.8 million of new headline rent, up from 15.3 million year on year. This represents ongoing growth in a time where growth is hard to come by. In addition to this, rent roll growth from existing space was 5.6 million compared to 2.1 million a year earlier. The board said the company had continued to capture reversionary potential from its portfolio, while vacancy remained at a stable 5.2%, which the company said reflected its prime locations and focus on customer service. All in all, I think Segro is a fantastic company that is set not only to benefit from the accelerated structural changes within the real estate industry, but to deliver Class A industrial warehousing to firms that supply us with the goods and services that we have counted so heavily upon in this year of change. With their fast pace of development, growing rent roll and expansion in both UK and Europe, Segro is set to steadily trend upwards in terms of both growth, opportunity and stability. David Sleeth, the CEO of Segro, has already acknowledged that a growing dividend is imminent, which is great news as an investor looking for passive income. Getting on this stock at a good price early on will almost guarantee the steady stream of growing dividends for the coming years. While it's not as high as other sources on the market, I think this equity is one of the most stable allocations an investor can make on the FTSE today. And for this reason, I'm going to give this stock a solid 9 out of 10. If the current yield was a bit more competitive with the top payers, I'd be inclined to give it a perfect 10, but not quite there yet. I'd be really interested to hear your thoughts on this, so let me know in the comments below. What do you think of the situation surrounding Segro at the moment? Do you currently have investments in Segro and are looking to add more to your position? Were you thinking of opening a position in Segro having seen the level of growth in the stock? Thanks for tuning in today. I hope you enjoyed the video. If you found it useful, smash the like button, I'd really appreciate it. And if you want to see more episodes of Stock of the Week, subscribe to my channel and be sure to hit that bell icon to get notified of new posts. I upload all sorts of videos on this channel, not just the Stock of the Week stuff, so if you're interested in investing videos, top fives, and personal finance in general, check out my channel for more on that. If you're a regular here, you might have noticed that I haven't been on YouTube for a while, and that's been down to the fact that I haven't been at my home setup for quite a while, but now that I've returned, I'm back on the bandwagon, I'll be making more videos, and there'll be a lot more content coming straight at you. So stay tuned for that. And until next time, see ya.